Hey everyone, welcome back to the Crypto Code. Today we're going through a simple, practical checklist that shows you instantly whether an altcoin is worth buying or whether it's a coin you should step away from before it drains your portfolio. In a market where only a handful of altcoins outperform while most bleed slowly against Bitcoin, this checklist is how we stay positioned in strength instead of weakness. Let's talk about it. Before we jump into today's topic, we want to remind you that here at the Crypto Code, our goal is to provide you with the top news, research, and tips when it comes to finding projects with huge profit potential. Stay to the end of this video and learn how you can earn $10 in Bitcoin and a free weekly trade alert just for attending one of our free workshops to learn more about who we are and what we do. No purchase needed. Our trade alerts have a 93% win rate, so make sure you take advantage of this free alert. Remember, I am not a financial advisor. This is not financial advice. So do your own research before you make any crypto trades. Okay, so the very first thing we always check is how the altcoin performs against Bitcoin. Not the USD chart, but the BTC chart. If an altcoin can't hold its own against BTC, it has no business being in a serious portfolio. We only want exposure when the altcoin is either in a clear uptrend versus Bitcoin or sitting right on a strong high time frame support level where we have a clean invalidation. Anything making lower lows against BTC is usually dead weight. It may bounce temporarily, but structurally those charts trend down for months. We avoid that completely. Once the BTC pair looks healthy, then we move to the USD chart for confirmation. Here we want to see a reclaim of an important level, a solid support zone holding, or a clear shift in structure like higher lows forming. What we don't want is falling knives or coins that have just lost major support. Good fundamentals won't save you if the timing is wrong, and the USD chart helps us avoid entries that put us 20%, 30%, or even 40% underwater before we even get a chance to be right. After that, we get into the real driver of the altcoin market, liquidity flows. Crypto is a flow-driven game. Coins go up when liquidity moves in, and they bleed when liquidity moves out. It's that simple. So the next thing we check is whether the ecosystem the altcoin belongs to is gaining or losing liquidity. If Solana, Base, ETH, or BNB are all showing big inflows, projects in those ecosystems tend to benefit. If an ecosystem is leaking liquidity, most tokens inside it struggle no matter how strong they are fundamentally. Then we track whale and smart money behavior. We want to see accumulation, not distribution. When larger wallets quietly buy a token over weeks or months, it's rarely random. When they start exiting, it often signals deeper problems or incoming dilution. Tracking this keeps us on the same side as the players who move markets. We also check narrative and sentiment flow. Narratives usually heat up before price reacts. A sudden increase in mentions, engagement, or community momentum is often an early warning sign that something is about to move. Price usually follows attention, not the other way around, so spotting this early gives us a huge edge. After flows, we move into real usage. This is where we look at TVL, DEX volume, daily users, monthly users, and revenue. These numbers show whether the project is alive or if people have already moved on. Strong usage doesn't guarantee a pump, but weak usage almost always guarantees underperformance. It's one of the most reliable filters for spotting hollow hype. Next, we review the tokenomics. This includes unlock schedules, emissions, team and VC allocations, token sinks, buybacks, and how, or if, the token captures value. A lot of altcoins look great on the surface, but get crushed by constant new supply hitting the market. If the emissions are heavy and there's no counterbalance, it doesn't matter how strong the narrative is, price will struggle. Finally, once all of that checks out, we look at the bigger picture. The team, the narrative, and our conviction. Is the team strong and consistently building? Is the narrative relevant this cycle? And do we clearly understand why this coin deserves a position? If we can't explain our own thesis in one or two sentences, we don't enter the trade. And from there, position sizing becomes simple. The more boxes the project checks, the larger the allocation. The fewer boxes it checks, the smaller we size. And if too many things look off, we skip it entirely. Right now, the market is slower, but this is the perfect moment to clean up your portfolio and prepare for the next rotation. You'll naturally stay aligned with the strongest altcoins and avoid the ones that stay red for months. Drop a comment below and tell us what you think. Thanks for watching the Crypto Code. If you found this video helpful, please like, subscribe, and hit the notification bell for more crypto insights. Let me know your thoughts on today's video in the comments below. You can also check out what we do here at the Crypto Code by registering for one of our free workshops where we show you how we and our students profit in crypto, no matter if the markets are up or down. If you register for the workshop, you also get access to a free weekly trade alert. Attend our free workshop, take a short quiz at the end, and we will send you $10 in Bitcoin. No purchase needed. We have already given away hundreds of thousands of dollars worth of Bitcoin just this year alone. Just look for the link in the description of this video to register for the workshop. It will be worth your time. Our public trade record currently has a 93% win rate, and you can view it here. Best of luck with your investments, and remember to stay informed and stay safe in the crypto world. See you next time.